Testing, testing. Let me know if y'all can hear me if you're watching right now. What's good, everybody? Let me know if y'all the audio's sweet. Can you guys hear the birdies in the background? If the audio sounds kind of weird, I'm wearing AirPods. I'm not at my home the studio office setup right now. So pretty much this is the travel YouTube live setup we got going on right now. So yeah, it is what it is. But we keep going. So we're gonna get started at 1. I'm just gonna make some announcements. Let you guys start joining in here. What's up, Shadi? What's up, Shadi? Shadi's the reason last week's forecast was not recorded. In case you were wondering where it went, you could blame it on him. Oh, Shadi. What's good, Leslie? What's good, Sophia? Mohammed? Peter? What's good? Audio is harsh. Yeah, I don't know. I don't know how to fix it. I'm just wearing my AirPods right now. Hold on, let me make sure they're coming from my AirPods. 1 second. Hmm. Yeah, the audio. I can hear the audio. I'm getting some feedback in my on my. It's not good at all. Holy crap. Yeah, the audio. I can hear the audio. I'm getting some feedback in my on my. It's not good at all. Holy crap. All right, let's try this. Let's try doing it from my MacBook speaker instead for a second, and let's see. I want you to let me know if it sounds better. So let's try this. All right, let's try this. All right, now it's on my other speaker. Let me know. Is this better? Testing, 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 testing. One, two, three. FEG, OB, breaker block, FEG. Way worse? Holy shit. All right, now let's try it. I took off my AirPods. I think there was like some echoing problem because I was wearing them. This should be way better. Let me know. Testing, testing, testing. This should be way better. If not, we'll just go back to the first one. This is horrible. Oh God, that's bad, bro. Sounds good, better than before. Should we go back to the AirPods, guys? Now it's smooth. Too low? Hey guys, if it's too low, you should try raising your volume. This is the best. I think it's the best. I think it's smoother. Well, we'll get started soon. I'm just gonna make some announcements on the Instagram real quick. Yeah, guys, just turning on the little birds in the background while I'm waiting here, doing some final adjustments, final announcements, and we'll get started soon. Thanks for you all being here. Hope you've had a great weekend. How was y'all's week last week? Let me know in chat while I do this right here. What's up? Yeah, we're gonna try to make it quick. The goal with these forecasts has been to make it nice, digestible, and quick. In the past, some of them have been like 2 hours long, so I want to keep them very to the point. So yeah, we'll try to keep it around an hour because I know a lot of people live very busy lives, have full-time jobs, a lot of other responsibilities. So don't want to make you watch me for 2 hours straight. I can get to the point in an hour. So yeah, don't worry, don't worry. Just final check. How's the audio? Just really want to make sure it's a good experience for you guys here listening. Good, bad, good enough? Let me know. the calendar here sorted. I have your audio at 250%. Mom week, not trader week. Nice. Busy, huh? All right, well, we can get started now. Should be all right. All right, guys. So it's 1 p.m. We're gonna get started right now. Let's get to it. Number one thing we want to be doing on these forecasts is always looking at the economic news calendar first. It is our roadmap for the week, and it is how we identify which days we want to be focusing on and which days we want to expect certain signatures in price. So if we start right here with Monday, you know how I feel about newsless Mondays. They're typically lethargic and lack major volatility, expansion conducive conditions in price. Okay, so whenever we see a Monday with no news, it's something we want to be very cautious of and not push the pedal and be aggressive, right? Now, you have seen me trade Mondays in the past with no news, and that's only when I see extremely clear intention in price showing me, okay, it's very clear, and there's no reason not to take your setup if it's there, right? We're gonna react and adapt, but you have to have this expectation coming into a Monday like this with no news. You're likely not gonna see your setup form right here, so just don't push it and don't force anything that is less than A plus essentially. So yeah, just very careful on that Monday. Tuesday, we have GBP news at 5 a.m. and we have CAD portfolio news at 8:30 a.m. This is great if you want to be intraday trading those Forex pairs, any GBP pair, any CAD pair. You could also intraday trade those indices as well. No problem with that. You guys know how I feel about the indices. 9:30 a.m. open provides plenty of volatility every single day. So Wednesday, GBP news, 2 a.m. red folder, JPY, red folder news, tentative. JPY pairs and GBP pairs on the table to trade if you're a Forex trader right there, as well as indices. And Thursday, we have AUD, 3 a.m. red folder news, and we have 8:30 USD red folder news, unemployment claims. Another valid trade day right here. Should see some nice volatility. Finally, this is the first USD red folder news we see on the week right here on Thursday. And then Friday, plenty of news for GBP and Euro pairs, CAD pairs, CHF pairs, and also USD right here at 9:45 a.m. red folder news. So looking like a very volatile week. So don't push it on Monday where there's absolutely no news on anything. Okay. This pretty much sets up the consolidation of the weekly profile right here, where we see majority of the expansion forming in this part of the week. Let's take a look at chat real quick. Do you win or lose 1M challenge? I don't know what that means. Audio good. Okay, gold reversing. We'll get into all that. So number one thing we want to look at right here is dollar. Dollar is the world reserve currency. Okay, so we want to be looking at this because this affects everything essentially. So this is the first thing we want to do and get our bias on, because if we get a clear bias on this, these currencies right here will have a clear bias as well. So it's very important we always start our analysis on dollar. Also a very important thing, we always want to start at the monthly chart, because it reigns supreme over all the lower time frames right here. You always want to be starting our analysis on the highest time frame and working our way down, because the higher the time frame, the stronger of a PD array it will act, the stronger bias we will have. So starting over here on the monthly, we were looking initially at this monthly fair value gap a few months ago. And we saw that it was failing to offer fair value. Now, the market only does two things. If we fail to offer fair value, we're likely going to seek liquidity, which we called that out right here once we closed above this monthly fair value gap. So at this moment in time, ever since this candle closed above, we've been looking at these levels right here as our draw. So we hit that draw right here in this candle, seek liquidity, and now we are showing intention above it to want to trade. We're not showing any rejection, so we can still seek this next level of liquidity right here, this next monthly premium array. That is what I'm expecting to be our target right now. And let's look at the lower time frames to see if that still rings true. Are we seeing candle closures above that high? Let's stack down now into the weekly, because we don't have any context right here on a monthly, so we need to get context, meaning if we're going to go higher, where are we going to go higher from, right? On a monthly basis, we don't really have an answer to that question. We do have a breakaway gap forming over here in about 12 days, but does it make sense, or does it make sense for price to come all the way down here and come all the way back up? Not really. So we're not looking at this gap as something to draw price into and then send it higher. Not at all. So we need to go down one time frame and just see, do we have more context to work with, something that can push price higher? Let's go to the weekly right here. And let's just organize some of our drawings. And this is great, right? We're seeing a weekly candle body close above this old swing high, which is beautiful. It means we are running it, right? If you don't know the difference between running and sweeping, running is when you have a candle closure above an old swing high. Sweeping is, for example, something like, I'm trying to get an example, something like this, where we sweep it and we don't get a candle body closure below, signaling we're not likely going to continue expanding lower. Right here, see how we didn't close body below that? We're likely not going to see more expansion. But when we see closures above old swing highs, that signals price has intention to want to continue pushing in that direction, right? There's no fair value gaps displacing lower, because what is a higher time frame wick? If we saw a higher time frame wick right here, for example, and we got a candle body closure below, well, on a lower time frame, that would just signal fair value gaps displacing lower, shifting order flow, and now pointing to the downside. But that's not the case right here. We're not seeing that intention to want to displace lower. So that's beautiful. Now on a weekly basis, we also don't have a really clear context to work higher off of, because if we want to push higher, where are we likely going to do it from? There's nothing really obvious here on the weekly. Sure, you might see this weekly fair value gap right here, but that's a breakaway gap. Does it make sense for price to want to retrace all the way down here to then continue pushing up? No, that is absolutely not high probability at all, right? We know this is a breakaway gap because of the way this third candle right here closed above this second candle's high. Remember what makes up a fair value gap? 3 candles. 1, 2, 3. This third candle closed an expansion candle above the second candle's high, making this a breakaway gap. Price is already showing intention to want to push higher. It would not make sense to come all the way down to then continue pushing higher, all right? So that weekly gap right there is not something we're going to look at for higher prices. So now we have to go down one more time frame, the daily, and let's see, do we have context right there on the daily? And here we finally see context, something very obvious that can send price higher. And what is that context? Very simple answer to this. What is that context? Someone tell me. If you remember, if you've been watching the streams, it's not, well, technically it is IRL or ERL, but what's the names? What's the names? Starts with a P. Beauty. No, I don't use XNS. I don't use XNS. I don't know what XNS is. There we go. There you go. Genshin got it. Push context. Genshin's been paying attention here. Yeah, it is IRL, ERL. You're not wrong if you say that. 100% right. It's push context. I've just given these contexts that I use, I've given them labels. So IRL to ERL is push. And for example, if we see ERL to IRL, I call that pull. Because just think about it logically. What's happening right here? Price is pushing higher. What's happening when we get ERL to IRL? well then that fair value gap is pulling price, right? For example, boom, and we have a fair value gap down here, something like that. It's pulling price as the draw. So just giving some of these context labels to make it simpler for my mind. So I'd call that push context. And there's two other contexts I haven't exactly gone into, but there's 4 different types of context I use. Those are the pretty simple ones we all know: ERO, IRO, IRO, ERO, push and pull. But now what do we see on this daily? We see push context. Beautiful, very clear level. If we're going higher, this is a very obvious level you're going to move higher from, this daily fair value gap, right? We have finally got the answer to that question we've been looking for. Couldn't find it on the monthly, couldn't find it on the weekly. We just found it on the daily time frame right here. So beautiful, beautiful stuff. And what's also beautiful about this is how this candle is not closing within this daily gap. We see this rejection right here in the form of this lower wick. Remember, higher time frame wicks are lower time frame fair value gaps. So there's likely something in here on the 1 hour displacing out of that daily. Also, love how we're sweeping previous day's low, previous day's high becomes a drop. This is just a great example. I would like to see higher prices already on the dollar right here. Let's just dive into the 1 hour. First, let's look at the 4 hours. Is there any 4 hour gap? Not exactly. So we can just work with the 1 hour right here. And would like to see that hold overall. And if that fails, we would need to sweep that low. We have 2 areas right here I would like to see. If this fails, I would like to see that either sweep that and then displace higher. I do like that on dollar for higher prices. I am bullish on dollar off of this daily gap right here. So let's mark dollar as a long. It's already long, so long. Mark that along. And this is our next draw on liquidity. Ultimately, that monthly swing high are my draws for this week. So expecting higher prices. Why is that daily fair value gap not a breakaway gap? Well, you wouldn't be wrong, right? We had that third candle close above. So if we wanted to push higher, we want to be looking for a 4 hour fair value gap right here, right? If there's a 4 hour gap in that candle's range, then we should have intention to push higher. So let's look at that. We see the 4 hour gap right here. The expectation was for this to push higher potentially, but we didn't, and that's fine. We fail, seek liquidity, create that daily fair value gap. You know, these daily fair value gaps, these breakaway gaps, there's nothing really, it's not like 100% guarantee, okay, we're not going to trade down into that. We're going to leave it open and continue higher. Right, price can still come into that. Protocol would be, if you have a daily breakaway gap right here at this moment in time, okay, you would go down 1 time frame. You would look for a fair value gap right here, and then you can use that fair value gap to then already expect higher prices. Over here, that did not work out, as you can see clearly. Failed, seek liquidity, created that daily gap, came down, and well, that's where we are right now. But yeah, you don't want to expect breakaway gaps to have a 100% success rate of not getting filled. If they do get filled, that's still fine, and it's still something we can expect higher prices from. There's totally nothing wrong with that. And if we get the respect right here, the reaction, we can trade that. Right? But those are just expectations we want to have in price. And if we see a breakaway gap, the protocol would be, well, we could probably move a higher off of this if we get the reaction right here on a 15-minute. Now, the way this candle closed, I'm assuming we never got that reaction higher. So there's really no reason to have taken any sort of loss right here on this 4 hour gap. Because we're always waiting for those confirmation higher. You never get your confirmation, well, there's no trade. So there shouldn't have been any sort of loss there on an idea like that. But moving on, dollar, we have a bullish bias. Euro would pretty much be the same exact thing, just inverse. So we would go to the monthly right here, always starting from the top down. What do we see? We had monthly fair value gap, fail to offer fair value. Now liquidity is being seeked. Hold on, did I just lose connection? Okay, no, I didn't. YouTube gave me a weird little message that chat disconnected. Anyways, back to the euro right here. Pretty much the same exact analysis we saw on dollar. We had this monthly gap, failed to offer fair value, price seeked that liquidity, And now after price has seeked that liquidity, pretty much what I was expecting or what I was waiting for is how is price going to react once we trade below this low? Are we going to start rejecting it, forming wicks, forming lower time frame fair value gaps, shifting order flow to the upside? Or are we going to continue just running right down below it, continuing that bearish order flow, painting body candle closures, candle body closures below it? And at the moment right now, it looks like we are running it. So if we're going to go lower, where can we go lower from? Well, this right here would not make sense at all. This is the monthly breakaway gap. And if we were to come down there, we would disrespect this area of fair value, meaning we'd likely already just, if we do this, we're going to seek liquidity up here. We're not going to respect that. So we can't use this yet. It's not even created, but even if it was created, it's a breakaway gap. So we need to answer that question and go down time frame. If we're going to go lower, where are we going to go lower from? Right over here, we have a weekly FEG, but what is it? Breakaway gap. Clearly breakaway gap. Would it make sense for price to come all the way up here to then go lower? Absolutely not. We would also be disrespecting this area of fair value. Right, so we would be failing off fair value. At that point, we'd likely seek this liquidity on a weekly basis. So this weekly fair value gap is not something that I wanted to look for lower prices out of. So we need to go down one time frame. Pretty much this is the exact same analysis we're doing on dollar right here. Do the daily, and we see daily push context to the downside right there. So bearish bias on euro right here. And all of these currencies are going to move inverse of dollar. All right, we're looking at this 1 hour gap right here to reject. Very small 1 hour fair value gap, not holding at the moment. And we are respecting this right here. Meaning, I would like to see this swing high get respected. If we're going to fail this 1 hour gap, which is looking like it since we closed above it, it's very small, but we got that body candle closure above it. We're likely going to seek liquidity. So we can potentially seek liquidity here, then ultimately continue moving lower right there. This is what I would expect on on euro with our bullish dollar bias. So we'll see what happens right there. Ultimately, looking for lower prices. And these are some 1 hour points of interest right there. We have daily bearish context, great daily rejection candle right here. Right out of that daily fair value gap. Exactly what we want to see. We want to expect this third candle to now just continue pushing lower towards external. Ethiopia gangs in the chat. What's up? There's 3 of you guys. Nice. Now moving on to GBP over here, which is clearly a bit stronger than euro. You can see euro is weaker. So if we have a strong dollar, we want to be shorting the weakest asset. In this case, clearly, just from an eye test, it's euro, based on how aggressive we're displacing right here. Whereas GBP, it's not displacing as aggressively. It's a very simple read right there. All right, GBP. Start from the monthly again. Just marking our next monthly discount arrays we can target would be that monthly swing low. We have just taken this monthly swing low. Let's see, let's go down to a weekly. There's not much context to work with there. On a weekly basis, we have a nice expansion phase right here. If we're going to move lower, where can we move lower from? We don't have an answer to that question right here. So let's go down to the daily. On a daily basis, we do have a daily fair value gap right here, but this is a breakaway gap. Already seen candle closures way below that, showing intention to push lower. And with dollar, we're expecting higher prices already. It just wouldn't make sense to look for anything higher right here. We want to expect lower prices already right on GBP. Let's look at the 4 hour. Maybe there's something on the 4 hour we can move lower off of. And there actually is something right here, not bad. We have 4 hour internal right there. That's not bad. So if we want to move lower, I would expect GBP to move lower off of that right here. That is not bad at all. That is not bad at all. In fact, GBP is actually showing more weakness here on a lower time frame basis currently. So that's interesting, actually. I'm gonna take a look at Euro GBP. That's not Euro GBP. Euro GBP. Euro GBP. So just putting up these notes right here for you guys. If you have a strong Euro GBP, EU is gonna be stronger and GU is gonna be weaker. So let's identify what Euro GBP is doing right here. Typically, it's super gross on higher time frames. You've heard me say this before. That's the reason I don't trade it. Even when I was trading Forex, I just completely avoided this. I'd recommend you avoid it too. It's on my banned list. Pretty nasty price action right there if you're trying to trade that. All right. So we have a strong Euro GBP. We would have a weak EU. So, let's identify what's happening here. Right now, we're sweeping weekly swing lows right there. Sweeping previous week's lows right there. Daily basis displacing higher and expanding higher off of that. Okay, so this is the reason why EU is stronger right now and GU is weaker. Because we have shifting order flow on a daily basis on Euro GBP. We have a daily fair value gap right here created after sweeping that weekly swing low. Let's just mark that out properly. And then we had that expand. So this is what we see as very high probability order flow shift right here. When we have a fair value gap displacing away from a premium discount array, higher time frame discount array, and then we see that respected, creating new expansions higher. And what's likely going to happen here is a new daily fair value gap, thereby confirming officially this is in bullish order flow. And then pretty much my bias would now be bullish up towards this swing high all the way up here. So EU likely going to act stronger and GU likely going to act weaker. For now, at the moment, the way I see EG looks bullish. So we have a bullish EG, you're going to have a weak GU. And if we're looking for dollar higher prices, well, we want to be shorting the weakest asset between EU and GU, or GBP. And this looks like the weakest one, clearly, right here. So let's mark that up on the short watch right there. If we want to move lower, this does not look bad at all. I have seen you activated the be adjust function at the bottom right on TradingView. If you disable this, DXY looks very different. I'm aware. I always have it on though. I always have be adjusted on. It adjusts for the contract changes. Hey, excuse me. Oh yeah. Oh yeah, that's fine. Yeah, apparently my TradingView Premium expired today. I was wondering why I couldn't do this. That's hilarious. Yeah, it expired today. I have to re-up it. That's so weird. Anyways, that's that. Let's continue on. I always keep it on. I recommend you have it on. When I'm looking at all my futures chart, I always have it on. It adjusts for the contract changes. All right, and I'm always looking at the continuous charts. So yeah, I want it to be adjusted for all the contract changes. All right, so over here. 1 second. Let me pull this up. All right, over here we're on the AUD monthly chart. Monthly has swept this monthly swing high, it's placing lower. Pretty much our next draw on liquidity is this monthly swing low. But if we're going to go lower, where are we going lower from? Do we have the answer to that question on the monthly? No. Let's go to the weekly. If we're going lower, where are we going lower from? Well, we had this weekly fair value gap that answered that question last week, and we are now moving lower from that. So that's great. We're seeing a nice weekly close right here, but we don't have a weekly premium array that can send us lower. Creating a potential weekly gap, but it's not there yet. So let's go down to the daily. Do we have context on the daily to move us lower? Oh, what the hell, trading me? Do we have context on the daily to move us lower? We do have a daily fair value gap, which is lagging right here with my chart not letting me draw it. That's weird. Can I draw a line on it? Nope. My trading is bugging. But we have this daily fair value gap right here, which I would love to mark it up, but it's not letting me. daily fair value gap with an overlapping old swing low. Okay, so just you see this gap right here, you see the swing low, just drag it out in time, and that's an overlapping line of defense. This is so weird. Why isn't it not letting me draw it? Can I draw with this? Let's see. If this doesn't work, then we're messed up. Nope. Can't even draw it with the pen. Weird stuff. But yeah, we're expecting lower prices. Yeah, that's so funny. This is how TradingView treats you when you don't have a premium plan. Try marking with trend lines. I am. Look, I clicked that trend line. It doesn't want to pull up, so that's really weird. All right, I just attempted to switch charts, and it's not loading the next chart. That's crazy. This is bad. Gotta refresh the page. All right. Apologies for the delays here. I don't know what's happening. All right, let's close this one right here. Let's see, does this open on this other tab? Okay, it did. Okay, that's so funny. We're just gonna work on this one now. And there are all my drawings I've been trying to draw for the last minute. That's crazy. All right, so we had AUD. We were trying to answer the question, if we're gonna move lower, where can we move lower from? So we had this daily fair value gap right here. Beautiful. Daily fair value gap right there. Overlapping old swing low. If you want to move lower, this could be a nice area to potentially look for lower prices from. Daily internal to external right there. So let's mark that up on the short watch. NZD. Start from the monthly. NZD is actually weaker here and actually took that low already. If you want to move lower, where can we move lower from? Well, let's see what targets can we go for next, right? We also have this monthly swing low right there. We need to see how context on the lower time frames is shaping up. All right, let's go to the weekly. On a weekly basis, there's nothing really. We move lower off of this weekly gap. Okay, great. We took out those targets. Let's see on a daily basis. If the daily still wants to push lower, we can still push lower off of that. So if we have context right there, we can still move lower. So let's look at that. Let's mark this daily fair value gap up right here. Looks great. And NZD is actually weaker right now. So be looking at this for shorts. Always keeping in mind relative strength. That is a huge factor in filtering out low probability trades. It's always trading if you're shorting, the weakest asset, and if you're longing, the strongest asset. You do not want to skip out the very important step of relative strength analysis. This does not look bad at all. Let's mark that up on the short watch. Dude, it's so funny. Like, you guys if you've been watching a lot of the streams, 9 out of 10 times, there's an internet problem. Whether I'm in my own house, whether I'm in Vietnam, whether I'm at my other house over here, I'm at my girlfriend's house right now. You will find bad internet across the board. So I don't know. I think it's a me thing. It's a bad omen. It just follows me around. I am the problem. But it is what it is. We just work with it. Going on to CAD right here. Going on to CAD. Does sweeping that monthly make it lower probability? Not if dollar is still showing us that it wants to push higher. So if dollar still has a very clear draw higher, this is clearly going to want to push lower and pretty much aim for this next draw right here. So you see how dollar also has that draw higher? If dollar is higher, it's going to push all the stuff lower. And if we're seeing clear context on a daily to send us there, well, then this would not concern me for, you know, a lower probability. All right, I would still like to see this move lower since we have a very clear bullish bias on dollar, and that pulls everything. We'll get to gold. We'll get to gold. Don't worry. We're getting into the good stuff after. All right, so just always have to go through these currencies first, guys. You should be lucky. I used to go through all the crosses right here. That is why the forecast probably used to be 2 hours. These crosses right here. I used to go over all those, which we will not be doing that today or in any other forecast. Since we are all futures now, baby. Let's go to the monthly. All right, 6C, very, very weak right now on a monthly basis. Just continually pushing lower, closing below old swing lows. Just marking up some potential targets right now on a monthly basis. Delete all of this. This monthly swing low right there. If we want to push lower, where can we move lower from? We don't have that answer on the monthly. On a weekly, if you want to move lower, where can we move lower from? We already moved lower off this weekly fair value gap, forming a new expansion phase, which is great. Previous fair value gaps creating new expansion phases. That is good right there. Now let's see on the daily fair value gap. Do we have a daily gap that can be the reason to send us lower already? And if there's not, well, you have to be careful because this is the third candle of a fair value gap creation. You could always consolidate, but again, if we have a daily gap, we can move lower off of that. We can use that as context. Let's look at the daily. What's the daily telling us? What is the daily telling us right here? Weekly gap. Okay. You have a daily gap, but at the moment it's a breakaway gap based on how this candle closed below it. Let's look at the 4 hour. Do we have 4 hour fair value gaps down already? And we don't. This is something that's way too small for me to consider a gap. Do you see how technically it is? It's really small. It's really small, and you almost have to like adjust the edges to really see that, how fine of a fair value gap that is. So it's not something I considered. So what happens here? Well, when I see something like that, very small fair value gap, or just a lack of a fair value gap right here on a 4 hour, because I'm just considering this a lack of a fair value gap, I would expect price to actually want to come into that breakaway gap, because now price isn't showing that true intention to want to displace lower. There's a lack of a gap right there. So that daily fair value gap becomes more of a stronger magnet for price to then move lower from. But we'll see. We'll see, because at that point, we have to think longer term here, because we're on the third candle of a weekly gap. At that point, if price wants to come all the way up here, we have to be careful. How are we going to react in this daily gap? Because if we consolidate and we don't get that reaction, if we don't get a clean reaction lower off of this, well, then price is just consolidating and awaiting the creation of the weekly gap, which will be created right here, and then we can move lower off of that weekly gap. All right, so there's a few scenarios that could happen here. The third candle of a fair value gap is kind of tricky. It can make this week very tricky because, well, is that candle going to consolidate? Is it going to retrace? Is it going to just continue expanding? I don't think it'll continue expanding based on how this 4 hour shaped up right here and this fair value gap being all the way up here. I feel like we may just potentially consolidate, but then again, you can't rely on feelings. You have to react and adapt. So what is price going to do inside this daily gap is what I'll be watching. Are we going to come to this daily gap and get clear 1 hour order flow shifts? And if we do, well, then that's already fine to play. If we don't get a clear order flow shift, meaning just a gap, a fair value gap displacing away, I expect this to consolidate, weekly gap, and then move lower. So that's the outlook on CAD right there. Pretty much all of these are going to be short, by the way, if we have a bullish dollar bias. All right. Failed to offer fair value over here on a monthly. This is Swiss Franc futures, likely seeing liquidity. Well, dollar's still bullish, so we want to expect lower prices. If we're going to go lower, where can we go lower from? Let's go to the weekly. Weekly breakaway gap up here. This weekly gap sent us lower, creating new expansion. Very clear bearish weekly order flow. Beautiful. Let's mark this up. This is a weekly bag. I need to create that as a new template. Weekly bag, so I don't have to do that. That's a weekly bag. Don't expect price to come all the way up there to continue moving lower. Let's go down to the daily. If we're moving lower, where can we move lower from on a daily basis? All right, let's mark that up. Let's see a daily gap right there. Daily push context. So this does not look bad at all. Price wants to move up here and then continue moving lower. Not bad right there on CHF. So dollar is a clear bias, and a lot of these majors right here have a clear bias as well. So looking like a pretty promising week. And there's a lot of red folder news as well for, I think, almost all these pairs right here. So it could be very interesting. Let's go get UJ. UJ over here, on a monthly basis, what's happening? We have a monthly fair value gap, failing to offer fair value. Market only does two things. If we fail to do that first thing, which is offer fair value, we're likely going to seek liquidity, right? Always have a bias, just understanding those two things. Failing to offer, likely seeking. So now let's delete that. Where can we push lower from? On a monthly basis, we don't have an answer to that. There is no context there. On a weekly basis, weekly context right here, weekly internal to external. What I do not like right here, and this is a very red flag, is how this candle failed to expand and close below this weekly swing low. We failed to expand, creating new potential weekly gaps, right? Because that's what we want to see. Remember, if you have high probability order flow, you want to see old fair value gaps create new fair value gaps. Not the case here. There's no weekly fair value gap created out of that, and we're sweeping previous week's low, which is a discount. This is very suspicious. Let's see what the daily is doing right here. So on a daily basis, we are closing above this daily fair value gap. Not good. Not a good sign. But we are now coming into this daily fair value gap right here, which would be pretty much the overlapping line of defense, right? Because this is an order block. This is a daily, failing the first line of defense and just retracing into this overlapping line of defense. So let's mark that up. Let's delete this. Understand that price over here on a daily basis can still move lower. Now this is a scenario where I would want to see more confirmation. I want to see more confirmation than your typical 1 hour fair value gap displacing away. This is, a question I get a lot. When do I demand more confirmation? When do you just look for a 1 hour gap off a daily? Or, you may have seen me demand something even greater. Well, you have a scenario like this where you have certain red flags, right? You don't have 100% bearish arguments right here. Like we just looked at on the weekly. Is there a very clear bearish argument to continue lower? Not the way this weekly candle closed. Okay, so that's a red flag, number one. Moving on to the daily. We have a reason to push lower right here. But what do we have right here? That's a potential red flag. Potential daily fair value gap gets created if we do not trade all the way down here and negate that. All right, so that can be very, very suspicious. Order flow would be shifting bullish right here on the daily. We do not want to see that. So it's something like this. I would not demand my singular 1 hour fair value gap off of this to then push lower. I would want to see more confirmation. So a 4 hour fair value gap displacing very aggressively away, something like this, creating a low probability daily gap, or ideally even negating it. And then that would be my high confirmation that we want to continue moving lower and continue seeking sell side. So that is what I want to see on 6J right there. Just more confirmation. It comes from a weekly fair value gap lookalike. I'm not sure what you're talking about. Oh, you're talking about this weekly fair value gap, this old order flow. Yeah, this is old order flow. Although it's not something I'm going to look at for higher prices. Definitely not something I want to look for higher prices off of. It's more so a speed bump, which caused that rejection. So yeah, if that's what you're talking about in terms of what can cause that rejection, that potentially, yeah, makes sense. But to frame like higher price, like IRL, ERL, for those of you new to the concept, this is not something I'd look for higher prices. But that reaction off of that, not surprising, for sure. But yeah, pretty much looking for just more confirmation right here. So let's mark that up on the short watch as well. I want to see a 4 hour fair value gap displacing lower. So I'd essentially it'd just be a 4 hour sharp turn. Fair value gap in. I want to see a nice deep fair value gap out. and then get something like that ideally. Let's delete some of these. There's a lot going on right here. So yeah, that is that. Now let's move on to the goodies right here. Indices. Let me get some water real quick. All right. Why don't people like trading YM US 30? I know plenty of people who like it. I don't like it because it tends to do its own thing a lot of the times. Aside from, ES and NQ. ES and NQ move with each other very, very closely. They're very closely correlated. So naturally, I like using them to gauge strength between them, relative strength, relative weakness, SMT, and just sort of get a gauge on how high probability the market is, right? Because if both of these indices right here are moving the same, it's a high probability market, except where, you have ES super strong on one day and NQ super weak. Those are low probability conditions since they're not moving in sync. You don't want to trade that. But what happens a lot of the times is you have YM always doing its own thing. So it's pretty hard to gauge the relative strength and weakness right there. For example, if we look at YM right now, let's look at a weekly basis on ES. Just take a look at what ES looks like. There's no weekly gap. NQ, no weekly gap. YM, we have a weekly gap, right? So just showing something else that kind of like conflicts my analysis. And if you just look at ES and NQ, we'll get into the analysis right here. It's very easy for me to determine what's likely to happen just looking at ES and NQ and not having to factor in YM, which again typically does its own thing. It's always moving pretty differently than ES and NQ. That and the fact that I have traded YM before, and I don't know, personally, I didn't really like the price action on it. That's just a personal thing as well with my data on that. I just really like focus on ES and NQ. It makes things simple, my analysis simple. I'm just looking at these two major indices. That's just the way I do it. Which pair is this on the CFD? ES you're talking about? I'm not sure. I don't trade EFDs. I think it's this one. S&P 500. On Vantage. I don't even know what Vantage is, guys. Like I don't look at that. I've never traded the indices on the CFDs. We have daily context on dollar, but we have already hit ERL on CAD futures. Should we now trade CAD or Euro, as CAD is technically weaker, but the context isn't there anymore? On Euro, it's still there. I just trade the one that has clean context, right? You always want to be trading what makes sense. If CAD doesn't have context, if CAD already has taken context right here, but Euro is still there, well, realize that Euro is going to move very similarly to dollar, right? Regardless. I'd rather just play what has the cleanest context, what we studied before. I wrote a Euro, looking for an order flow shift there. Once you have the order flow shift, we can go down to lower time frames inside that gap and then trade that, right? Keep it very, very simple that way. If CAD doesn't show that, regardless if it's weaker, if it's not showing something we can play based on like how we read charts, well, there's nothing we can do. Regardless if it's weaker, there's just nothing we can do there. You need to have that clear context. We need to have that clear PD rate, and then we need to have that clear entry inside a kill zone. So just make sure it looks clean. It has a nice, valid setup, is what I'm trying to say. Oh, let's see. Yeah, I haven't gone into it, but yeah, I'm bearish on ES and NQ. Too much gambling with ICT concepts. You have ICT in your name. I don't know if you're trolling or not. Anyways, let's go to monthly right here on ES. So on a monthly basis, we have swept a monthly swing high. Well, we have 12 days left, but right now at the moment as we see it, swing high is being swept from previous monthly high. But overall, we are in very bullish monthly order flow. Okay, so this can change. There's nothing really we can be like, all right, I'm going to be bearish on a monthly basis. Not exactly. Let's go down to the weekly and see what stories are being told with fair value gaps on the lower time frame here. So over here, we had a weekly expansion candle right here that was looking very promising. This was looking very promising to form a fair value gap on a weekly basis, which ideally we would have created, and we could have had a very clear context to come in using this week. Now that didn't happen. We came and completely negated that gap and closed very deep right here. All right, so that already on a weekly basis, I do not like this failure of a fair value gap being created. That in itself could already act as a soft bias right there, just based on the lack of a fair value gap getting created. Right, because if the market truly wanted to push higher, we would have created that gap and then being able to use that as higher time frame context. So right here on a weekly basis, I'm very cautious for higher prices just on this. All right, go to the daily. And on a daily basis, what's happening on a daily basis? So at the moment, we're seeing a aggressive sting into this. You can delete this right here. We're seeing an aggressive sting into this area of fair value. All right, I don't like that. It's very suspicious right now. Let's delete this. Very suspicious right now. So what's an area of fair value? Well, it's simply when you have buy side right here offering the market, buy side, sell side, giving sellers a fair chance to participate, buy side offered again. So this whole area right here where buyers and sellers had a fair chance to participate in the market is fair value. Okay, that's good. What's not good is when we sting aggressively deep into it, because what happens now with these areas of fair value? The only area where fair value is now lacking would be above it, where only buy side was offered. We would want to see price come down, respect this area right here, this overlapping gap, and then push higher off of that. Ideally, that's the case. I do not like this daily deep candle closure within that, although it's not something to look and be ultra bearish on already. It's a bit of a kind of a neutral zone right here, where if we get this next candle shifting order flow higher, for example, we start seeing 4-hour fair value gaps higher right here, something like this, then I would be interested in looking for longs. This is something where I want to wait right here. I want to see how does this 4-hour gap get respected. Let's mark this up. A 4-hour FVG right there. Potential daily 4-hour IROTA era. Not something I'm going to trade. Remember, Monday has lacking red folder news as well. And daily's in a bit of a weird spot. We do have a daily gap lower, but price is coming into this fair value area. I would want to see more data here, because right now we're pretty much at the equilibrium of this overall expansion leg right here. A bit 50-50. Do you use interest rates? No, I don't use interest rates. I don't know why you even said interest rates. Anyways, pretty much what I'm demanding over here on ES is more information right here. Let me delete that first line of defense. We're now at the overlapping line of defense, and at the moment not really respecting it and creating 4-hour fair value gaps lower right here. So I have a slightly bearish bias. I'm leaning towards a bearish bias right here, but not something I want to play into just yet for lower prices. I want to see, are we going to respect this gap and create new expansion lower? And then once we do, well, then it's very, very clear we want to seek this opposing liquidity. But again, we're in a very weird spot where we are starting to disrespect that fair value area. But I want to see, are we going to respect this, continue that 4-hour bearish order flow, and that could be interesting, or do we disrespect it, shift order flow, and then potentially look higher? Because just because of how strong the market has been overall on a monthly basis, that order flow is extremely bullish, right? And who knows, maybe Trump context can come back into play. That Trump context is nothing to mess with. And if we start seeing that displacement higher, well, you know what's happening. Like, monthly order flow has been extremely bullish. We don't want to jump the gun on shorts right here. So that's the reason I'm demanding just a little more confirmation over here on what price really wants to do. So I hope that makes sense. That's ES. Let's go to NQ. Now NQ, wow, that's much weaker. Let's go to monthly. NQ is much weaker. In fact, we're sweeping this previous month high, monthly swing high right there. Still hasn't closed, but at the moment that's what we see. Let's go to the weekly. Let's get a clear picture on that. Let's delete everything. Yeah, this looks ugly. On NQ, this looks way weaker. Just way weaker. The way this candle's closing right here, not pretty. On a, let's go to the daily basis. See how we just failed to create a weekly expansion candle higher. That's nasty. Very nasty. And the fact that we just closed below that level. I'm just gonna mark this out because this looks like on a weekly basis, like where we want to head. As you can see right here, we're clearly disrespecting the fair value area to a much greater degree on NQ. What's the fair value area? Right here, right here. Buy side, sell side, buy side. This is not what you want to see. We want to respect the high of that fair value area. This entire area right here, only buy side's been offered. We want to be seeing rejections off of that, quick rejections. But what we're not seeing is that. We're seeing very deep candle body closures inside of that. Not good at all. So on NQ, it's actually way more bearish. So let's go down to the 4 hour and see. We have a 4 hour gap right there. I would like to see that create new gaps lower. Same thing on ES. And then it'd be very clear draw right here towards this opposing liquidity right there. ZAR, I don't know what ZAR is. Is it pivot context on NQ? I would not say it's pivot context. I would more so call this flip. This is what I would consider flip context. I'll let you think on why. Why is it flip? What's flipping? But anyways, that is NQ, bearish bias. Still just want to see how do we react right here. Just same on ES. I want to see what happens early on this Monday. Do we want to shift higher, or is this fair value gap right here going to send us lower? All right, I want to see this 4 hour order flow confirm. Are we seeing the respective premium arrays sending price lower? On a daily basis, this does not look good for our prices. This is an extremely aggressive move lower. That's that Kamala context. Let's go to CL. You like my drawings? Thank you. Thank you. Quite the artist, if I might say. So let's look at oil. Oil right here, we're just sweeping this previous week's high. These become our next draws. We are overall in a consolidation. It's pretty nasty, but based on this previous weekly high sweep, that's what I can infer. Go to the weekly. These are just our next discount arrays we can draw towards too. Again, lack of fair value gaps right here on a weekly basis. Not pretty. We want to see clear context. So if we have no clear context on a monthly, on a weekly, let's go to the daily. But what can we see on this right here? Also swept this previous week's high. Likely seeking our next swing lows right here. So just using the candles right here. General idea of what's happening. Let's look at the daily. finally see some clean context. So IRL to ERL. Cool. Well, that already delivered. We were looking at this last week. So that already delivered. Right there. I would like to see this continue expanding lower though. Great expansion right here on the daily. Let's look at the 4 hour. Is there anything clear on the 4 hour we can move lower off of? And we do see some clear context right here. Some nice sell side below. 4 hour context right here on oil. So that looks nice. If we're going to move lower, we can already move lower from there. I'm just going to mark that up on the short. And forgot to mark these up on just... Oh, hell nah. I have to pay... My God. I have to re-up my premium. That's so sad. That's so sad. Hell nah. You get the point. I was trying to make these yellow because we're waiting. But we can only work with one color now. The free version here. Alright, but yeah, bearish on CL. Bearish on CL. I just want to see continued lower prices right here off of this 4 hour gap. We have context right here. So we can look for that. And then we'll just have to see what fair value gaps get created off of this. And then we can just play those new 4 hour gaps lower. And yeah, I'm just going to wait till Black Friday. You guys know there's always a crazy trading view Black Friday sale. So I'll just be waiting on that for sure. Let's look at gold. So gold monthly order flow super bullish right here. Bullish monthly gap. Not looking too hot at the moment. It's not looking too hot. But on a monthly basis, we haven't closed yet. There's 12 days. There's still 12 days right here. So things can change. It can be easily like a lower rejection wick. Things can change. So over on a monthly basis, just going to submit to this bullish order flow and not look aggressively for shorts here. Let's look at the weekly though. Because the weekly is getting sussy right here with this weekly fair value gap pointing lower. So we are shifting order flow on a weekly basis. All right, so pretty 50-50 right now. Let's go to the daily. On a daily basis, we have bearish order flow. So we're going to have to see this shift. If we want to look for higher prices, we need to see this daily fair value gap flip. All right. Now, this daily fair value gap wouldn't be something I'm looking for lower prices out of. We're in a monthly gap, right? This is very 50-50 right here. So I'd like to see a daily gap higher. And then that could be interesting to now look for short longs right there. I just want to see a daily gap. So we're pretty much a waiting game right now on gold, where I don't want to play this daily context lower because of the overall monthly gap and that monthly order flow being bullish. Just want to submit to that higher time frame trend and not jump the gun on shorts here. If you want to start looking for shorts, what you're going to want to observe is that daily fair value gap get respected, creating new gaps lower, and then you can start playing that short bias down once we completely flip this monthly fair value gap and show that there is zero intention to want to push higher off of that. And that will come through this daily fair value gap getting respected and creating new daily fair value gaps lower. So that's what I would be looking at. If you want to play shorts on gold, I would wait for that. But overall, I am leaning towards the longs right here just based on that monthly bullish order flow and waiting right now. It's a waiting game for me on gold for new daily gaps higher. To get that daily shift, that daily order flow shifting, impulse shift, I would be interested once we have clean context right there. And this could be nice. But pretty much a waiting game. So yeah, this would be orange if I could. You guys get the point. I can't. I'm a broke boy right now. Can't even afford trading the premium, right? Unfortunate. Go to silver. On silver, this looks pretty nasty. Monthly basis, we have swept this swing low. Sorry, swing high, swing high. Hard times, Jonas. It's hard times. Hard times. So on a monthly, we swept this monthly swing high. This does not look good. Obviously, it looks a lot of consolidation right here. The lack of a fair value gap means what? Consolidation, lower probability conditions. On a monthly basis, that's the case. Let's look at the weekly though, because we can still look for clean context on a weekly. Breakaway gap. This is also looking like a breakaway gap. We are sweeping this monthly swing low. Alright, also looks pretty 50-50 right here on silver. Daily is not closing below old daily swing lows. Just pretty much gathering everything we can see for bullish arguments, bearish arguments. This is not nice. There's no fair value gap right here created off of this old fair value gap as well. So that's a red flag. We always want to see old fair value gaps create new fair value gaps for the highest probability conditions. But what happened right here? We did not, and we actually respected a discount array in the form of the daily swing low, rejected it. Now we're in this sort of consolidation right now. So silver has none of my interest going into this week. I don't like this signature right here of lacking a new expansion phase lower, and ultimately showing respect to these old swing lows right here, these old discount arrays. So arguments can be made both ways. I don't like silver, so that's not something I'm going to look at. Gold is much more interesting because we do have that higher time frame context. Do you see how easy it is on the eye to, from a monthly basis, see what might gold do? Like, look at the monthly, clear bullish order flow, clear context. These are where we want to be focusing on. Look at silver, it's kind of just an eyesore. Like, you kind of get a headache trying to determine, all right, what is silver going to do next? It's not very clear, right? So it's not something you want to be trading, essentially. Same with oil right here, not pretty on a monthly basis. On a daily basis, it does get cleaner right there. But silver, you work from it all the way top down. It's an eyesore, really. So not something I want to look at. But yeah, what's up, chat? Any questions? I see Miter's dominating the chat right now. I don't know what you're so passionately speaking about, my friend. How y'all doing though? I think that's pretty much it. Pretty much went after through everything. Are you talking about pivot context on the monthly right here? On silver? How would you trade 4-hour IRL to ERL? One example. I mean, 4-hour IRL, that's simple. If you just see, where was it? There was an example on oil. 4-hour IRL to ERL. Price comes into that 4-hour gap. Let's take this for example. Price comes into this 4-hour gap. All right. Swing high, swing low. New high, new low, fair value gap overlapping. That's a 5-minute unicorn. Now, there's a few entry models. It doesn't have to be a unicorn. If you don't like unicorns, you can look for something else. This is a 4-hour. If you want to look for a fair value gap simply displacing away, you can just wait for price to come into the 4-hour gap. 15-minute fair value gap displacing away. And then that's your impulse shift entry right there. That's just a 15-minute gap displacing away from the 4-hour. But if you want to trade a 5-minute off a 4-hour, then you could use this unicorn right here. If you want to trade a 15-minute off a 4-hour, you can just use the fair value gap displacing away. It's up to you. You have to pick one though and stick by it. You don't want to be flip-flopping. You want to fully commit to one to get consistent results. You need to have a consistent entry model if you want to get consistent results. You don't want to be flipping and flopping between unicorns and impulse shifts and order blocks and reaper breaker inverse fair value gaps. Pick one and stick with it. All right. We good. Hope market won't destroy my EU trade, right? UCAD 4-hour. There's a 4-hour bullish rally that is okay to play higher, even though it's not on CAD futures. UCAD 4-hour bullish fat. It's okay. I'm bullish on. Let's go here. I'm bullish on dollars, so I'm just gonna be looking for shorts on UCAD. But you're looking at you're looking at the USD CAD daily weekly expansion. Ooh. Weekly expansion higher. Daily bag right there. 4-hour FVG right here. If you do see a nice setup out of this, if you do see like a 4-hour to 15-minute fair value gap, 4-hour to 5-minute, then yeah, you can trade that. That looks nice. That looks nice. With ES and NQ, with that first bearish value gap plus NQ heaviness not confirm the unusual flip as context. Let me move this over here. Let's go to NQ. Or where are we? Would this not confirm the flip right here? Not if we start seeing that shift higher, right? Because I'm also taking into account just how bullish overall we've been on a monthly basis. I'm leaning still more towards these overall getting flipped. Like if we see a flip right here, I'm bullish. Bit of a different scenario. Since monthly order flow is just so strong. This daily shifting right here, but again, that's why I'm saying it's more of a 50-50 area. Want to get more data. Are we going to start shifting order flow right here to want to start pushing higher? Or are we going to continue displacing lower, continue getting that aggressive flooding lower, and then that makes it very obvious that we are failing this area and we're going to seek this opposing liquidity. But right now, we're very 50-50 right now in terms of like where we are in this range. We're right at equilibrium. See this low, see this high? We are right at equilibrium of this range. You are not going to get the clearest things when you're at equilibrium right here. I just want to see more data. More data. Are we respecting that, or are we disrespecting that? If that makes sense. All right. With futures currencies, would you recommend trading them during London or the New York session? About these currencies. They move great during London too. They move great during London. They can move during London and New York. I've just found that from Forex in general, they move best in London. Since London usually sees the low or high of day. And if we want to catch a reversal, price will come into your higher time frame POI, have the unicorn form, and then reverse right off of that. So typically that happens in London. And then we just expand into New York. So that's why typically I Forex, I would miss a lot of setups when I was trading it because I'd be sleeping and they'd form up in London. Forex moves really good in London, whereas indices don't. The indices move best in New York session. So that's why I also flipped over to trading them more away from Forex, because it just fit my schedule way more and I wasn't missing anything, right? All the good setups will come in my kill zone when I'm actually awake, whereas in Forex, I'd miss a lot of things because a lot of the high probability setups would go overnight in London. And I'd wake up and I'd already see price expanded from my POI, and now I'm kind of just left trying to trade the scraps of it, right? The further expansion, where we already had the majority of the expansion happen over London, where we saw the actual reversal from my POI, which is what I want to capitalize on. I want to capitalize on that low risk buy. I was finding myself missing those a lot, so it just works better for me, these futures. NQ specifically, ES, oil, commodities, they move very nicely. Let's look at Bitcoin, correct. Yeah, we always look at Bitcoin. So Bitcoin right here, finally expanding off that monthly fair value gap. Very obviously. creating new expansions higher. If we're gonna go higher, where can we go higher from? We don't really see much right there. On a weekly basis, if we're gonna go higher, where can we go higher from? Let's delete some of these right here. We have a weekly breakaway gap right here. That gets created in, I believe this is 4 hours, right? Likely going to be a breakaway gap. So if we have a daily fair value gap in this third candle's range, we can look for higher prices. Let's go to the daily. The daily, we are starting to consolidate right here. So we have a daily fair value gap right there. Can potentially use that to move higher. So that's what I see on Bitcoin. I wouldn't want to go down anymore right here since we're just consolidating. So I'm just going to watch the daily fair value gap, potential higher prices. Not bad. What do you think about Paul wins? Is that really scripted? No, I don't think it was scripted. But Big Mike looked real bad out there, man. He looked really bad. I had high hopes for him. I was like, I don't know, I felt bad. It kind of hurt seeing that. Yeah, exactly. Like elderly abuse, man. In case gold starts creating new fair value gaps to the upside, but it reached upper fair value gap overlapping swing low, it could create a strong area of price. Let me read that again. In case gold starts creating new fair value gaps to the upside, but it reached the upper fair value gap with the overlapping swing low, is it considered a strong area to reject price down? No, I would not, because what's the overall context right here? Monthly internal to external. So that's going to take precedence, and we have to factor that in. We have a monthly very bullish order flow. If order flow shifts over here on the daily, at this point, I'm just looking at order flow here on the daily, and this becomes pretty much irrelevant to me right here. I'm trying to make this a nice visual example. I kind of messed it up, right? Where is it? Right there. All right. If we shift order flow there on the daily, and we have a clear monthly bullish order flow right here, all that matters to me is this right side of the chart. All right. Monthly order flow, monthly context takes precedence. You don't have to stress about what's happening over here. Now, if there was a weekly fair value gap, though, from a monthly, we see a weekly gap. Well, then at that point, yes, that's opposing PD array, that's trapped order flow. We'd want to see that weekly fair value gap get disrespected first, right? So if there's a weekly bearish gap, like somewhere up here, you want to see that get traded through, like right here, and then you can trade once we disrespect that, and then this is your low resistance conditions. All right. Is there heavy raining? Yeah, it's so stormy outside. I'm kidding. That's the sound effects. That's the lo-fi music essentially. Keeps me locked in. It was birds in the beginning. I don't know. Sometimes it just changed without me looking. Now it's a thunderstorm. Thanks, man. Been there once skiing. Where? Austria? Poland? I don't even know what are you guys talking about. Pull up to Europe? I'd love to. I love Europe. Where do you want me to go? Geo was good, bro. Was good, man. Nice to see you in here. So what's up? In which case would you qualify SMT occurring between NQ and ES? How do you know which index is lagging which? Well, the way I use SMT, and it's a shame I can't pull both indexes side by side. My trading view expired today. But I just use SMT as a confluence to an already existing trade idea. Pretty much. That's how I use it only. It's just a confluence to an already existing trade idea. So if I'm bullish on ES, I'm just looking at SMT if we have an NQ. Okay, let's do this for example. This is so ghetto. For example, we had ES right here and we have NQ on the right. If there is an already pre-existing idea for higher prices, daily IRO to euro, if NQ doesn't come into that daily gap, but ES does, I'm viewing that as SMT inside the daily gap, and then I'm looking at NQ for higher prices. Since it didn't need to come all the way into that gap, it's that strong. We can already use that context on ES. For example, we have daily fair value gap here, and NQ not coming in, already move off of that. So it's pretty much I only use it for a pre-existing trade idea, not like to determine like lag. It's to confirm strength between them. I'm bullish here, I'm bullish here. I want to trade the stronger one. The stronger one is always going to be the asset that makes the failure swing. Or for example, NQ moves off a daily gap right here. ES moves off higher off of there. We have a swing low here. Let's say ES decides to sweep this and then move higher. This is a completely random example, but if I'm bullish already here, NQ does not need to run that low. We always want to trade the one that has a failure swing, right? Because that's going to be stronger. It didn't need to come into that discounted rate. Just like for the fair value gap, it didn't need to come into that discounted rate to look higher. If ES already does that action, we can use NQ if it's stronger and trade the one which did not take the PD array. If that makes sense. It was a pretty ghetto example right here, but please visit Austria. I'll teach you skiing. I'd love to go to Austria. Somalia. Okay. The background sound. This is called Brain FM. That's called Brain FM. So it's like science-based sounds to help you focus. I actually pay yearly for that. But it's damn good. It's damn good. It works. Helps you lock in. I always have it on when I'm trading or just doing any sort of deep focus work. Always on. Brain FM has a bunch of different types of noises you can look at. I highly recommend it. Highly recommend it. But anyways, yeah, guys. How long have we been going for right now? This is supposed to be short. Literally, I was talking about we should make these short and to the point. Now it's been an hour and a half. God damn it. We're gonna have to end it here, guys. Definitely went longer than expected. Any final questions? Any final questions before we wrap it up? Do you see yourself using StatMap? No, but I do have it on right now. I do have it on. Let's see. I've been messing around with it. Where is it? This is the wrong one. That's the other StatMap. And whatever. It's not like I use it, so whatever. No, I don't use StatMap. I don't use StatMap, but it's a pretty cool tool. Many times what that StatMap will do is it just aligns with a PD array we already see. Right, so if we're looking at a 1 hour for Valley Gap, that StatMap manipulation level will align with that fair value gap. So it's like an already added, it's like an added confluence, but with the way we analyze charts here, it's pretty much built into our system. So I don't see the use for it personally. Well, are you an entrepreneur? I would consider myself. Yeah, why not? Trader, entrepreneur. You seen T Trades indicator? Yeah, I actually have. I had it. I was gonna mess with it later today. It looks pretty cool. Let's see if I could enable it right here. I'm trying to figure out how to use it. That looks pretty sick. I love that. Where is it? Somewhere in here. There it is. Ah, come on. I need to upgrade. I don't know what's happening. Honestly, I didn't even pay for it last time. I think TradingView gave it to me for free, the pro plan for being a partner with them. So I'm gonna have to email them because what the hell, man? That's so sad. Anyways, yeah. I'll just wrap it up here, guys. I'll just wrap it up here. Hope you had a great weekend. Thanks for tuning in. I hope you guys learned something today, something insightful. Have a profitable week, my friends. Yes. Yes. Yeah, you can trade gold and silver in London if you see the setup. Why not? There's nothing wrong with that. Thanks, brother. You have a blessed week as well. I will. I'm trying to get my trading view fixed again right after this. Do you ever do back testing sessions? I'm more of a forward tester myself, but for these new indicators, the stat map and T trades indicator, yeah, I'll back test those because those are easy to back test. What's not back testable is my model right here, since it's very dynamic, meaning we have to look at this whole watch list and filter out the best setup, as well as taking into account the economic news calendar. It's really hard to simulate those conditions in a back testing session since it's just a lot of variables. It's very hard to back test that. So I forward test and gather data moving forward. But for these indicators, they're easy to back test. They're very simple. So yeah, I'm gonna do a back testing session later when I have time. Love you too, bro. No diddler, Tyrone. Top currencies for the week. Pretty much a lot of these right here, since dollar has a bullish bias. You just want to be trading which one is clear right here. I do like GBP. I do like GBP right now. It is weaker than Europe. A lot of these look nice. But yeah. Thanks. You learned everything by forward testing? A lot of it, yeah, a lot of it was learned by forward testing. Forward testing, journaling, learning from your mistakes, and then refining those mistakes. A lot of trial and error. So yeah, a lot of this is learned forward testing. A lot of the model that I developed was made by forward testing. But yeah, guys, I'm gonna wrap it up right here. Been saying that for like the last 10 minutes. Love you guys. Hope you have a great weekend. Let's kill it this week. Might do a live session in the Discord, so keep an eye out for that. I'm thinking about it. But yeah, guys, I'm gonna wrap it up. Love you guys. Peace. Bye bye.